Welcome to The Explainer. Today, we're going to decode a really powerful technique, one that pro traders use to pinpoint exactly when to buy and sell. Seriously, this is a method that takes the guesswork out of trading and gives you a clear plan for your entry and your exit.
Okay, let's just dive right into this. You know the secret to smarter trading? It's often hiding in plain sight, literally painted right there on the price chart. These historical price levels, they're like a roadmap, showing us exactly where the market is likely to turn.
So first things first, let's talk about a problem that every single trader faces. It's that constant, nagging uncertainty. You're in a trade, it's going well, but you're asking yourself, when do I actually sell? When do I lock in this profit or, cut a loss?
And that is the crucial question, isn't it? Finding a good stock to buy, well, that's only half the battle. Knowing where to get out, that's what separates a profitable strategy from what's really just a guessing game.
And we've all been there. Come on, you know you have. You either sell way too early and then just watch the stock keep running without you, or you hold on too long, hoping for just a little more, only to see that winning trade turn into a losing one. It's incredibly frustrating.
Well, the solution is to learn how to read the chart's hidden language. And we do that by understanding a core concept called support and resistance. Or you can just think of them simply as market floors and ceilings.
This is where it gets really simple and powerful. Think of this as a metaphor. On one side, you've got support, which acts just like a floor under the price. And on the other, you have resistance, which acts like a ceiling holding it down.
So support, think of it as a safety net. It's a price zone where time and time again, buyers have stepped in, created demand, and pushed the price back up. It's basically a floor that the price has a really hard time falling through. And resistance is just the opposite. It's the ceiling. This is a price level where sellers historically take control, they overwhelm the buyers, and they stop the price from going any higher. The price gets rejected.
So a great way to picture this is to imagine the stock price as a ball, just constantly moving between these two key levels. It bounces up from the floor, that's our support, and gets pushed back down from the ceiling, our resistance.
Okay, so that's the theory. But how do we actually find these levels on a real chart? Let's turn this into a practical skill, because spotting these lines is actually a pretty straightforward, repeatable process.
Right, here's the magic number, 3. This is crucial. For a price level to be considered a valid floor or a valid ceiling, the price needs to have tested it and reversed at least 3 times. The more touches, the stronger that level is.
Here is the exact 4-step process. It's super simple. Step 1, zoom out on your chart so you can see at least 6 to 12 months of history. 2, look for those sticky points, prices where the stock reversed at least 3 times. 3, make sure those tests, those touches, are spread out over time. And finally, step 4, just draw your horizontal line to connect them.
Now that you can find the lines, here comes the real power, turning that knowledge into an actionable strategy. This is where you build your complete trading plan from start to finish. And this table, this lays out the entire blueprint. If you're buying or going long, you enter when the price bounces off that support floor. Your stop loss, you place it just below that floor for protection. And your profit target is the next resistance ceiling. The whole logic is just flipped if you're selling short.
Let's make this super concrete. Imagine a stock bounces off a really strong support level at, say, $120. You could buy right there, place your protective stop loss just below it at $114, and then set your take profit order at that known resistance level of $128. Boom! You've got a complete trade plan with your risk defined and a clear goal before you even click the buy button.
All right, to wrap this up, let's just review the most important rules. Think of this as your final blueprint for using support and resistance the right way. Following these simple rules is going to add so much discipline and structure to your trading. Remember, the more tests a level has and the more spread out those tests are, the more significant that level is. And this is crucial. Use these levels for everything, your entry, your stop, and your target.
And that leaves us with one final, really important question. You now have a powerful tool to define your trades inside that range. But what happens when that bouncing ball finally smashes through the ceiling or crashes through the floor? Well, that's called a breakout, and learning how to spot those, that's the next step to mastering the charts.